Like many companies, Lincoln National stock has had a difficult year, but the stock jumped immediately after the company reported earnings recently. With all of the action in the stock market following the darlings in the tech sector or the collapsing prices in the airline and leisure sectors, many have forgotten the beaten down insurance sector. Lincoln National is down about 40% year to date. However, the shares trade for about 3.5 times estimated 2020 earnings. This is an incredibly low multiple and a discount to its own trading history. Although the fundamentals are generally fine, this is a stock to keep your eye on for the next quarter or two. So let's take a look. In the most recent quarter, Lincoln reported $2.24 per share in earnings. Wall Street expected $2.17 per share. This should be a wake up call. JP Morgan analyst Jimmy Buller wrote in a recent research report that business trends appear to be healthy. Buller remains concerned about Lincoln's high exposure to equity and interest rate sensitive products, but feels the healthy underlying business fundamentals and a depressed valuation create an attractive risk reward. Buller rates shares the equivalent of a buy and has a $76 price per share target for the stock. That's more than 100% above the recent price target. Additionally, more than half the analysts covering the company also rate shares the equivalent of a buy. To be sure, there is a lot of uncertainty about the insurance industry. There likely will be claims to pay for business interruption and workers' compensation. Moreover, low interest rates make it harder to earn any return on the insurance float. That doesn't sound great, but Lincoln's valuation and a stock price reaction to the recent earnings indicate investors should take a look at Lincoln and maybe some other insurance stocks. So let's take a look at our charts for Lincoln. And we're looking at a 20-year monthly chart on Lincoln National Corp, and the symbol is LNC. And for disclosure purposes, I do not hold any shares of Lincoln National at this time. And looking at the price chart, we can see that low there in 2009, a step up in 2011, another step up in 2012, another step up in 2016, but a step down here in 2020. Now, keep your eye on that. The current price is 32.75, which again is about less than half of the price target in the mid 70s. So it is a favorable stock if things continue to improve. Again, as I said in the lead-in statement, this is a stock that's not ready to go, but it's something you want to keep an eye on for the next quarter or two. Into the MAC, we can see that the top is there, but the bottom hasn't been set yet. And there's a pretty good difference between the fast line and the slow line there. It's not very negative at a negative 6.6, but the difference between the fast line and the slow line means that there might be some volatility. But watch for that bottoming process in the fast line, I would say within the next quarter or so. Into the histogram, you can see that that level there is still above the level of 2009, lower though than 2018. But it does look like the decline is slowing. So watch for that turn in the histogram. Moving on down here to the price rate of change. Again, the fast line has a separation between the slow line. Therefore, it's going to take some time to repair. But I think that this is the only time other than 2009 that it's been this negative. So I think it might be an interesting opportunity if the fundamentals can stay together. Moving here into the RSI, same sort of thing. We bounced off that 20 line. We have a fish hook here, so it depends upon how this evolves. Will this continue on down or will it continue on up? Now, looking back in times of history, when it has gotten below this level here, such as here, here, here in 2009, also here in 2008, 2009, and then there in 2002, that's been a pretty decent buy point. So keep your eyes on that. Into the stochastics, looks like the level there in 2018 was more negative than currently, but it depends upon where that fast line goes. It looks like it wants to move through the slow line and perhaps head on up. If it does, that could be an indication of a good stock. Moving down here into the Williams, we have a very large base, 2018 through 2020. It hit this here and moved on out that oversold territory with a fishhook here. So how does this evolve? Again, does this continue on down or does it turn up? My sense is that it's going to turn up. And if it does, that's another sign of a bottom in the stock. So a few of the oscillators are showing potential bottom. But I still say, based on the MAC, keep your eye on it for the next quarter or two. There's plenty of room to get into this stock and still make some money. So be patient and be cautious, but keep your eye out. And for today, that's ChewDog Charts. Thank you.